So good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun from TradeMastery.com, coming at you live from Colorado here on Saturday, the 26th of February. Now, what a wild market we've had, right? The market's starting to go in anticipation of Putin invading Ukraine, and then he does invade, and then the market rallies. Who would have thought, right? It's a fake out market. Don't make sense of it. Just follow the price action, follow the money. We're still, big picture, I'm still very bearish. This is not the beginning of a big rally on Wall Street, in my humble opinion. We're still in a downtrend. The fact that we had a couple of random up days in an otherwise downtrending market is still a downtrending market until we break resistance at 4,600. So with our S&P currently right here, right under the 4,400, it's still under all three moving averages. So it's still a bear market unless we start to recover the 200 SMA, which at this point is way up at the 44.50, right? So for that reason, despite the bouncer. Now, let me ask a quick question. How many of you agree with me that you think there may be some turbulence, some volatility, some selling pressure in the market next week? Or do you think we're out of the clear and the market's going to rally from here on out? Common sense says one thing, price action still says one thing. What do you guys think? Are we going to get some selling pressure, or is this Thursday, Friday rally ready to be believed? I told my traders, now I don't give trading advice or recommendations, but I told traders what I'm doing is going to cash and using that as an opportunity to lighten up and sell any remaining open equity positions into the strength that we had. It's a good place to unload those stocks before they crash next week on the strength. So that's what Wall Street pros do. How can you tell that that was what they did on Friday compared to Thursday? Visually, how can you tell? Simply look at the candles. The candle was bigger on Thursday on the green than it was on Friday. So that's a descending buyers. Buyers are starting to run out of steam. No, they haven't run out of steam yet. It's still a bounce as a bounce until it takes out support. But the buying was less convinced on Friday, right? Oh, yeah, a lot of trade. Oh, thanks, Bob, Scott, Steve, CB, Jim, Ash, Tony, Mira, Phil. Fake out, right? I agree. Selling pressure, trends down, Fed week. Oh, yeah, you're right. It's a Fed week. Like you said, only price action and support and resistance, right? That's all that matters is price action. You'll drive yourself bonkers. I know I have, trying to figure out common sense versus the market. Like common sense would have said during the middle of a big pandemic, the market would have at least gone choppy, sideways, or down. But instead, biggest bull run ever, despite millions of people dying. So you can't make sense of the market. All we have as humble traders is the numbers and the money. And so we follow price action. So anyway, enough of the broad market chit chat. The other telltale sign, wasn't that a book by someone famous like Poe or somebody? Anyway, the other telltale sign is the VIX is still way over 22 where there had been resistance. 22, remember, had been kind of the upper moving average line on the VIX a few weeks back. Anyway, the VIX is still way skyrocketing up here near 30. Well, 20, where'd the VIX close? 27.59. So VIX at 28 is still very bearish, okay? Despite the trend immediately been a pullback, the VIX is notoriously up and down, right? So as long as it stays above all three MA lines and north of 22, 23, I'm still a bear. Now, if the VIX gets under on this chart 23, then we start to get a little more bullish. But I think the market's still in for turbulent times ahead. Hey, John. Yeah, if you guys have any questions, type them in text here. And good point from Mira, exactly right. She's brilliant. She says, need to see a higher low, so more selling may begin in the near future. Right. We don't have the higher low yet, so it's still a sequence of lower lows and a downtrend in the market. So it's still a descending channel. What's going on here? Let's take a look at a few swing charts here. What's been strong lately? Oil and metals, right? U.S. Steel and Freeport were strong yesterday, and crude's still been strong, but I'm starting to short crude, okay? I put on a little trade in SCO because it's just too irresistible. Simply irresistible. Remember that song, Simply Irresistible by Robert Palmer? Anyway, that was a simply irresistible big green candle. And so I bravely, or bravely, boldly, or stupidly, we'll find out, put a little trade on down to where I think is a low and an intermediate low in shorting crude oil. So I bought me a little SCO. put my gavel on here. And the reason is, if you look at the chart, that's a horrible looking chart, right? Or even the 1-year chart you can see. Let's zoom in a little bit tighter here. I bet where the big money's at. Traders vote with volume. Big money is expressed by volume. One of my longtime colleagues, Mark Leibovich, has a concept called volume reversal, which is very intelligent. He's a smart guy. The thing is, when you see, at least when I see volume, institutionally high, like twice X volume on a green candle day after an extended long sell-off, that might be a turning point, right? It may be a dip in the road. That may just be the start of a dead cat bounce, right? And keeps going down. But because we had some Wall Street geniuses buying 12 million shares on a day where this thing normally only trades 2 to 4 million, that's a 2x delta, right? Twice as much volume on the buy side on Thursday. That's where I started to buy, right? And I will merrily scale in, because if I can double my money, I'm a happy camper. Anyway, crude may still be on the demand curve and still may go up, but this is one thing to keep on the radar. The other, of course, is our inverses like SQQQ, which has been on a nice uptick ever since January. Gave back some Thursday and Friday, but it's still really nicely up from the low near 30, not doubling, but headed that way up near 50. And our VIX, our favorite, those are my two favorite short instruments. Inverses are SQs and UVXY. Another good play may be getting back into, I bought here and sold here on the natural gas inverse cold, KOLD. It goes up when the price of natural gas comes down. It spiked up nicely here. They split it, they reverse split it. I'd been 11 to 13 this channel. Anyway, this may be yet another pivot, right? So keep an eye on KOLD. Now, one that goes up when the market goes up is SOXL. And this one had really good price action. Let's take a look now at the 2-day candlestick chart. This is 2 days worth of SOXL. And I was trading it both days because it goes up when the market goes up. Kind of choppy on Thursday, but it ran all the way from 31 to 40, right? That's a huge range. One of the more important concepts when it comes to successful swing or day trading is trade instruments that have big profit potential, as evidenced by large trading ranges, as seen by the numbers on the far right, right? So, in this kind of chart, if you take a look, again, the most important thing of any, the single most important component of any chart is not the chart, it is the range. Ask any Wall Street trader, right? The range in this guy was phenomenal. We had 31 to 40. That's a $9 range on a $30, well, 35, 40, now $40 instrument. Another quick tip. Fridays usually have lower volatility. Mondays and Fridays, historically. Monday's usually the worst day of the week. Fridays often come in a close second. Tuesday, Wednesday, Thursdays. And for proof, go back and look at, say, the S&P candles, the average height of the candles of the S&P over the last 5 years. And you'll see that the largest candle days occur predominantly Tuesday, Wednesday, Thursday. What that means to you as an active trader is you should really focus your energy as a trader only primarily, you do some maintenance work on the Mondays and Fridays, but most of your, at least my heavy action trades occur during Tuesday, Wednesday, Thursday, because the odds are better. Look at this. Big day on Thursday on the left, much narrower, much tougher. I got stopped out on this thing on yesterday, much narrower range on Friday, okay? So that's another quick kind of a rider downer is focus your energy as a trader on Tuesday, Wednesday, and Thursday, because that's where ranges tend to be expanded, and that's what you want to focus on. Now let's take a look at a few other rockstar charts. Now, although the peanut gallery was trading IRNT, I think that was most active for most of the day yesterday. That's a terrible chart. I mean, the range is okay, but what's the problem with this chart? What really stinks about this chart? What's the range? Thumbs up, but the tradability, bum, 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 bum. Right, from CB. Right, Mira, too choppy, the C word. It's choppy as heck. I would have got stopped out much more often than I would have made money trying to trade that punk, because it goes up, you get in, it pulls back, you get stopped out. Now it's going up again, you try to get in, you get stopped out. Yeah. Been there, done that, got the t-shirt a few 10,000 times. So So that brings me to the next concept, and that's that we want to be sure that you focus on, drum roll please, but wait, I'm going to stop the recording right now. For those of you watching this on YouTube, for all of you who are here live, just hang on, we'll continue. For all of you, I'm going to stop the recording right now. For all of you on YouTube, that's all, folks. You miss out on the best stuff, which is coming up next. To be sure to hear the brilliant tips, hopefully brilliant tips I've got to share based on millions of dollars worth of real trades, be sure to come to the live events on Saturday at www.trademastery.com. You can get in for the free Saturday Trading Week Ahead broadcast. So with that, let me stop the recording, and then we'll resume for all of you who are smart enough to be here in person.